Today, interest rates are over 7% for a 30-year mortgage, even higher than 1 year ago. And yet homes in Healdsburg city limits are selling 20% faster than they were a year ago, with a third of all homes getting multiple offers. So what's happening in the Healdsburg market? Is it ever going to slow down and prices fall? And if you're looking to buy, should you wait to see what happens? In this video, we'll share everything you need to know about the Healdsburg housing market, whether you're looking to buy or whether you're looking to sell. I mean, in any normal housing market, when interest rates are so high, you would expect the market to be strongly in favour of buyers, with properties struggling to sell, but that just doesn't seem to be the case. For example, 104 Marion Lane, 1016 Sunnyside Drive, 213 Chiquita Road, all sold this year and all got over 5 offers. I mean, inventory levels, which are still hovering around 3 months, also points to a seller's market. So to really understand what's going on, we need to dive into the data. So I recently took a look at the housing market data for the Healdsburg area from January to April 2024, and then compared it to the same time last year. I also analysed the data for properties within city limits versus properties outside of the city limits to see if there was a difference between a city property and a more rural property. So what does the picture look like? Well, there's no question that for anyone looking to finance the purchase of a property right now, I mean, it's tough, with a $1 million loan likely to cost around $6,000 per month. Despite the high cost of home ownership, the number of sales still increased nearly 10% year on year to January to April of this year. So it's probably no great surprise that the number of cash purchases also increased dramatically, from 28% last year to 50% of all transactions so far this year. And this balance is even more pronounced for more expensive rural properties, where 60% of all homes purchased were purchased for cash. So what are the big factors that are influencing the Healdsburg housing market? Well, there's 3 main factors: the relative affordability of homes, the limited supply, and the increasing popularity of Healdsburg as a destination, especially for the older demographic. So let's tackle the thorny question of affordability. I mean, in any housing market, affordability is driven by 3 things: interest rates, median prices, and median incomes. By any normal measure, Healdsburg is in no way affordable for somebody who lives and works in Sonoma County, where median incomes are 35% lower than the Bay Area. However, a significant percentage of homes are purchased by people who are either earning Bay Area salaries or who are used to Bay Area or San Francisco median prices for homes, which are still 20% lower than Healdsburg prices. I mean, this difference in incomes and house prices resulted in 64% of all homes purchased last year in the Healdsburg area being purchased as non-owner occupied homes, which basically means they were either investment purchases or purchased as a second home. So far this year, that number is actually much lower at 36%. And one of the great things about the city of Healdsburg are the limits that are put on the growth of the city. In recent years, much of the allocation has been taken up by the developments at Montage and Mill District. And while these limits on the number of new homes being built is great for controlling the growth of the city, it does create a limited supply in a market where there are already fewer people willing to sell than people willing to buy. If we look at the number of homes for sale this year, it's half the number of homes that were for sale, for example, 5 years ago to the year ending March 2019. So this limited supply is enough to drive an upward market in its own right. Whether we like it or not, Healdsburg is getting to be more popular, not less popular, driven by its status as a food and wine destination. And of course, the lifestyle it affords. It's an amazing place to live, whether you are 30 years old or 60 years old. Its attraction as a destination among people who are either work optional or retired further drives a housing market where cash is king. It's been well documented. We're in the middle of one of the biggest ever transfers of wealth from baby boomers who are aged 60 to 80 years old, who actually hold 70 trillion in assets, which is half of the entire nation's wealth. And there's no question that some of this wealth is being used to purchase homes in Healdsburg. So with lots of buyers competing for a limited supply, you might think that prices are continuing to rise, but certainly the first part of this year, that's just not the case. Median prices have actually fallen back nearly 8% since this time last year, with the average home in city limits selling for $774 per square foot. However, I would urge a little bit of caution with these numbers, as the volume of homes sold in Healdsburg is not necessarily necessarily statistically significant, so there's potential for a large margin of error in this median house price data. That being said, I know from my own experience that a lot of sellers of premium downtown properties are keeping an eye on the prices that homes in Mill District and Montage are getting as an indicator of the value of their homes, hoping for a positive impact on the value of their home. When we look at the value that properties are trading at, we almost need to discount for the luxury development effect, because if we remove sales of homes in Montage, the average price per square foot for homes in the city actually falls 10% to $689 per square foot. I mean, inevitably there is some halo effect for the prices that are being paid for homes in these developments in places like Mill District and Montage, but they're a very different proposition targeting very different buyers. So to equate these prices with the prices of other high-end homes in downtown, I mean, it's a really dangerous game. When looking at the housing market trends, we also need to make a distinction between rural properties and properties in the city limits. They represent very different buyers and a very different proposition. Ever since COVID, there's been a strong demand for rural properties, and this year is no different, with sales of rural properties doubling compared to this time last year. That being said, if you're looking to sell a rural property, as long as it's appropriately priced, you can expect it to take 3 months, which is double the amount of time it takes to sell a property in the city limits. So what about the future? Well, if you're thinking about buying or selling a property, is now a good time? I think we all thought that interest rates would be significantly lower at the end of this year than they were at the start, but that's just not going to happen because of the stubborn inflation numbers and also the strong employment data. Current estimates expect rates to stay the same or maybe fall to the low 6%, but that just isn't enough to change the dynamics of the market. And even a rate of low 6s might be wishful thinking. However, we do have the small matter of an election coming up, which can do two things. It increases the market uncertainty, leading to cautiousness among investors and consumers. And then secondly, elections can impact consumer confidence, which in turn impacts the housing market. I mean, positive election outcomes or perceptions of stability and economic growth can boost consumer confidence, leading to increased home buying activity, but the reverse is also true. I mean, if I was thinking about selling and I wanted to do so within the next 12 months, I'd want to do so now, before we get into the election season, and while lack of inventory is still on my side. But you just need to make sure that your home is dialed in and priced right. For buyers, the picture's a little less clear. If I was looking to buy a downtown property or a rural property of the type that's popular among Bay Area buyers, I would absolutely want to buy now, as I just can't see prices coming down for those premium properties. If you are looking for something that's less popular, you can probably bide your time and wait for a property to come up that meets the majority of your criteria. However, you will want to make sure that you find something before interest rates start to fall, because that will only bring more buyers to the table competing for the existing inventory levels that I just don't expect to increase anytime soon. You can rest assured that if you sit on the sidelines, you'll almost certainly end up paying more in the long run. I mean, let's face it, no one ever looks back and thinks, oh, I wished I'd waited before buying a place in Healdsburg. So if you made it to this point in the video, there's a good chance that you're thinking about either buying your next home, investing in this area, buying a second home, or selling your current one. We'd love to be your real estate resource of choice, so do email me at david@brewingtonhargreaves.com to get started. I mean, our team's the #1 team in Sonoma County, with over 71 families helped in 2023, with nearly 80 million of real estate bought and sold. So we're here to help you, whether you want to sell your home, buy a second home, buy a vacation rental, or if you just want to get access to new properties coming on the market. We've got loads of videos giving updates on the area, information about new construction, as well as luxury developments, and lots of other information and guides on how to navigate buying and selling your property in Sonoma County. And hey, before you go, if you like this video, you'll love some of our other videos about everything you need to know before deciding to move to Sonoma County. So there, I break down an A to Z of the different areas, what it's like living there, and way more. So make sure to check it out. See you in the next video.